I can't believe that at all. I mean, I can, but really? Your credit score has nothing to do with how much money the bank is going to give you to buy a house. Now that we have gotten that out the way, welcome to my channel. I know that might not be the bombshell that you wanted to hear or expected to hear, but it's the truth. And here we're going to give you the truth about what you need to be successful. So make sure you watch it till the end, and I will tell you how you can make sure that you can get more money for your dream house as a first-time home buyer. I know that the home buying process can be very frustrating and challenging, especially when you don't know what to expect. And it's my goal today to help you have a better understanding. The first place to start with that is going to be credit scores. They're going to play a huge role in your home buying process. They determine not only your mortgage approval, but also the interest rate that you'll pay when you purchase your house. Okay. Many first-time home buyers don't understand what's necessary to prepare their credit for a home loan. Like, did you know that if you have no credit, it's just as challenging as if you have bad credit? Or a lot of younger adults and those with limited credit histories often face unique hurdles, and I'm here to help, right? And by unique, we mean people who are unscorable, because that is a variety of person too. Okay. So the first thing that I really want to focus on with you is making sure that you understand how to build your credit. It doesn't have to be complicated. And in doing that, we're going to focus on some things that I feel are going to be necessary in doing that. The main thing that I think is going to be good for you is understanding that there's going to be alternative methods for securing credit through like secured credit cards, utility bill payments, rent reporting services, and installment loans. Installment loans are loans that you pay the same thing for every month. They're going to help you establish a solid credit history. Things like that will allow you to qualify for a house with no credit. All right. So I've created a guide to help you learn how to use bills that you pay every day to help you qualify for a loan with no credit. Yes, I said you can qualify for a home with no credit. I've done you a solid and created a guide to help you so that you know what to do and how to take the bills that you pay every day to help you qualify for a house with no credit. Okay. Did you know that? If you did, let me know in the comments. If you didn't, still let me know in the comments, because that means that you want the guide, right? And that this is going to be something that's going to work for you. So those are the things that you can do if you don't have any credit. Now, these are the things that I want you to do if you're going to focus on building your credit so that you can get the best loan for you as you're doing your home buying journey. Okay. So the first thing that I want you to pay attention to is to pay your bills on time. I'm never going to stop driving this point home. Pay your bills on time. If you want to be able to borrow more money from a bank so that you can buy a house, you must pay back the money that you borrow when you say you're going to pay it back. If you don't, then you look untrustworthy. A credit score is like a character score. Credit is going to say if this person borrows money and pays it back on time when they say, then you're going to have a higher credit score. Just like if you borrow money and you don't pay it back on time, you're going to have a lower credit score. It's a character score. The more likely you are to do what you say you're going to do, higher score. The less likely you are to not do what you agreed to do, lower score. That's how you're going to know. Okay. Another thing you can do is you want to make sure that you never go over your credit limit. If you get a credit card, they're going to tell you, hey, you have $1,000 credit limit. If you always keep that thing around the $1,000 that they gave you, then you're less likely to gain points in that area. Okay. So one thing you want to be mindful of is that if the money isn't there, or if you're maxing out the card, then you're not getting points there. So some credit card issuers will let you go over your limit, but you don't want to do that. It's your responsibility to make sure that you pay the things that you're supposed to pay when you say you're going to pay them. The last thing is pay attention to how much money you carry over on a month-to-month basis that you owe on the credit card. This is going to be usage or utilization. Okay. This is going to look like, again, let's just use the example of $1,000 credit card. If you're using $800 of that card each month, that's going to look worse than only using $100 of that card. You want to make sure that you keep that low. I don't want to get too deep into credit utilization, because you can look at it as the individual card and the overall collective of bills that you have. I don't want to confuse you. So just pay them people what you owe them when you say you're going to give it to them the way that they gave it to you. I learned that one hard, but that's a story for another day. If you want to hear it, let me know. So what's one thing that you have done this year, last year to improve your credit? Share it below, because I'd love to hear what works, and we need to help each other grow because we want to see everybody reach their credit goals. Okay. So as you're thinking about the credit and what you need to understand the mortgage approval process. So your credit score doesn't just determine whether you're approved for a loan or for a mortgage. It also impacts your interest rate, which is how much more money you have to pay to borrow. But the higher your score, you have a lower rate. We just said that. It'll save you thousands of dollars over the life of the loan. While your debt and your income determine how much money you'll get for the house. Okay? So that's that there. So understand the difference between the different loan types that you have as a home buyer. You have conventional loans, which are not backed by the government. A credit score of at least a 620. For conventional loans, you'll usually need to put down anywhere from 3% to 20% of the home's purchase price, what you buy it for. The more you put down, the lower your monthly payment and your mortgage insurance. Okay, these are different parts that make up a mortgage payment. Okay, then you have government backed loans. These are going to be designed to help people who are either first time home buyers or individuals who have a lower credit score. Right, you have 3 different loan types that are going to help you with this. The first one is FHA. FHA is backed by the Federal Housing Administration. These loans are going to have lower credit rate requirements. So you can have a lower credit score and get this loan. Usually a 580 is, where it's at with a 3.5% interest rate, but it can go as low down to a 500 credit score with 10% down. The second loan type is a VA loan. It's available for veterans or active duty military who are eligible. This loan is going to be backed by the Department of Veteran Affairs. It does not require down payment, which is great, or private mortgage insurance. So the minimum credit score for this is a 580 to 620. It's going to be at the discretion of the lender. Make sure you ask if you're unsure. The third type is USDA loan. I want to preface and make sure that you understand USDA loan has 2 different versions. We are talking about the one that you can get approved for through the lender. Okay. So this loan is going to be backed by the U.S. Department of Agriculture. It's aimed for home buyers in rural areas. If you live in a city, you will typically not be able to participate in the USDA loan. If you want to know if where you're buying your house participates with the USDA loan, go to the website or go Google USDA rural loan map. Type in the address where you want to live and it'll tell you whether or not that area qualifies for USDA loan. Now, just because that area qualifies for the loan don't mean you do. So you need to make sure with the lender. So they always, they don't require down payment, but you'll usually need a credit score that's a little stronger at 640. 640 is also usually going to be able to be used for first-time home buyer programs. So understanding these options can help you prevent your credit or decide your credit goals and if they're attainable. So if you have any questions about loan types and credit, ask them below, okay? And I'll be sure to break down a video in the future to answer these questions for you, all right? You can achieve your home ownership dreams. You just have to work on building your credit, understanding that it takes time, but every small step that you take gets you closer to your goal. Start by setting realistic, y'all, I'm gonna get it together, by setting realistic financial goals and timelines. Use resources that are available. I've listed a few of them today for you, and I'll have some down in the comments to help you as you navigate through this process. Remember to be patient and keep pushing. Don't quit, okay? Homeownership is a journey. It's not a race. Like, it don't just happen like that for everybody, okay? So tell me one thing that you're going to be doing to prepare for homeownership this year and let me know in the comments. We're rooting for you every step of the way. I believe that it's possible for you. Homeownership is for you, okay? You got to rewind that, play it again until you believe it. It is for you. So if you found this video to be helpful, make sure that you give me a thumbs up and share it with somebody who is also on the journey to homeownership, because we want to see everybody get there, okay? Don't forget to subscribe for more tips on credit, financing, home ownership, and let me know, are you ready to take the next step? If you are, make sure you download that non-traditional line of credit that I told you about earlier, and I'll have some other things or resources down the bottom, because we want to make sure that we can make homeownership a reality together for you. Thank you so much for watching, and I'll see you in the next video.